everyone, welcome to Cheongfuli Weekly Report. Here we bring you the latest China's steel market prices and analysis every week. Spot prices rose early in the week before turning downwards. As of present, spot rebar prices have fallen 20 renminbi per ton week on week, and spot hot-rolled coil prices have dropped 10 renminbi per ton from last week. Market trading sentiment has weakened week on week with lower overall trading activity. From the macro perspective, global markets anticipate easing geopolitical tensions, sending crude oil prices down to relatively low levels. Domestically, a gas explosion at a coal mine in Qinyuan County, Shaanxi, has prompted tightened safety supervision, resulting in a sharp decline in local coking coal output. Despite accelerating mine resumption, actual production remains low. On the supply side, total output edged lower. Total output of 5 major steel products stood at 8.525 million tons this week, down 112,200 tons week on week. Meanwhile, molten iron output stayed flat week on week and will remain high amid current mill profit conditions. By variety, rebar output slumped to 2.1215 million tons, a weekly drop of 95,200 tons. HRC output was nearly unchanged at 2.9523 million tons, down 2,800 tons week on week. Demand remains sluggish. Total apparent steel consumption reached 8.4877 million tons this week, falling 274,200 tons week on week. Specifically, apparent rebar consumption was 2.1317 million tons, down 190,800 tons week on week. Apparent HRC consumption stood at 2.9523 million tons, decreasing by 2,800 tons week on week. Pessimistic market outlook has dragged down speculative purchasing demand. In terms of inventory, total stocks of 5 major steel products shifted from destocking to inventory accumulation. Total inventory hit 15.4817 million tons, rising 37,300 tons week on week. By product, rebar inventory was 6.5369 million tons, down 10,200 tons weekly. HRC inventory amounted to 4.1458 million tons, up 40,700 tons week on week. Overall, China's domestic steel market ran weakly this week. Steel output dipped slightly and demand fell week on week, turning inventory trend from destocking to accumulation and weakening overall fundamentals. Higher raw material prices have squeezed steel mills' profit margins, but producers still intend to ramp up and resume production. As downstream market enters traditional off-season, terminal construction and procurement demand have limited upside potential, building up implicit pressure on domestic supply and demand structure. Since steel prices tumbled in May, China's steel export orders have increased week on week, and external demand can partly offset weak domestic consumption, keeping steel market in tight supply-demand balance in the short term. In addition, tight domestic coking coal supply offers strong cost support for steel prices. Market participants hold bearish expectations for future market, yet shrinking raw material supply forms cost support. Short-term steel prices are expected to run in weak oscillation. Subsequent market trend needs close tracking on steel supply-demand changes as well as coal mine resumption progress. Based on the above analysis, here is our operational suggestion. Purchase steel according to actual demand and properly control inventory risks. Institutional views hold that the traditional peak demand season for steel is now in its late stage. With increasing rainfall in southern China, market demand will keep weakening and supply-demand pressure will gradually mount. Nevertheless, raw material prices will remain supported in the short term due to safety inspections at domestic coal mines. Steel prices are expected to move sideways with fluctuations. To sum up, steel prices will generally remain volatile. We need to closely track changes in steel inventories and domestic coking coal supply. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.